Alright, what's going on, trading family? This is Shaheen. I'm here for the first recap of my PDT challenge. So, as you guys know, if you watched the first video, I'll link it in the description, but just check out my most recent video. It was me announcing my new PDT challenge, where I was going to start with a $15,000 account and see if we can get to PDT, that $25,000 mark, without risking too much percent on each trade like I would on a small account challenge. So like I said in that other video, we're risking between 10 to 20% on each trade in this $15,000 challenge. I deposited money yesterday on Friday, and so we're going to review the one trade that I took on Friday. I deposited around 12,000. I have the other 3,000 coming in on Monday, so by then I'll have the full $15,000 in the account. But if you guys use Tastyworks, you know how when you deposit that same day you can get $1,000 in buying power, and that's it for that initial day. So on Monday, I'll be trading with the entire account size. Yesterday on Friday, I was just trading with the $1,000. The good thing about that though is that's all I needed, since on Friday, yesterday, I didn't have any defined risk trades. If you guys have followed me for a while, you know that I have two types of trades. Trades that I accept zero on and accept the full risk, and generally expect a higher percent profit if I make profit. And then I also have my defined risk trades, where I use my theory levels to cut me out of positions if it starts going against me. When I do place a accept zero, lotto trade, whatever you want to call it, when I place one of those, I am looking to put in less capital per trade than I would on a defined risk trade, just because I want to accept the full risk of whatever I'm putting in. So I've decided that $1,000 is a good point for me to leave my accept zero trades at. So when I accept zero, when I want to throw in a lotto with my group, and for this challenge, I'll be putting in $1,000. And if I have a defined risk trade that I post for my group and for these videos, I will be putting in $2,000 to $3,000 to start with, until we build a nice profit cushion, and then I can potentially start sizing up. But let's talk about what happened on Friday. So, as we all know, we got a really nice push early on in the day, and there was a lot of money being made here. I wasn't in any of this. Okay, I was just letting it set up. We pushed right into my gap zone here, so we got the start of the gap zone, and then we had the fill above. And for the next couple hours, we started chopping big time, and premium started getting killed on both sides, calls and puts. You can expect, if you guys have traded 0 days for a while, after a big push like this in just an hour, and then chop for the next 3-4 hours, that premium just got demolished. You get super high volatility, and so the premiums get jacked up right here, and then this is generally where the market makers are making a lot of their money, as people are getting FOMO since they weren't in this initial move, and they're loading and loading into these calls or puts, doesn't matter, both are getting killed. And so that's what happened for a while. When I was watching this, one thing that I noticed, one thing that we've all noticed on Fridays before is a move very similar to this, where we get a push and then chop for a long time. This is a very common theme on Fridays. And I'm sure a lot of you guys who are watching this video have noticed this before. But like I said, you push, you chop for a long time, and then generally at the end of the day, you can get a nice move in either direction, to the upside or to the downside. The market can follow a name like Google, for example. We all know how Google can make a very similar move to this, where we push up on a Friday, chop very, very hard, and then at the end of the day, we rip, and those 0 days make a ton of money. So that was kind of what I was gearing up to look for in this chop. I was seeing, okay, what's the trend in this chop? because even though we're chopping, they're still generally going to show a trend if we're going to move in either direction near the end of the day. We're not just going to push up, downtrend into this chop, and then all of a sudden buyers are going to step back in again, and then we rip higher. That's generally not what's going to happen. What's most likely going to happen is we're going to push, and we're going to chop, and while we're chopping, we're going to slowly trend in one direction, indicating, where we're possibly going to break out. So that, we're trending upwards, but the calls are still losing money. Okay, so people are seeing this trend, and they're generally trying to get in early, and their calls are getting ripped. The premium's getting ripped out of them, and they're losing money until they have to sell for a loss, and then market makers come in later for the actual move. So one thing I identified during this chop was we were clearly trending upwards. We're getting higher low after higher low after higher low after higher low. And after a few hours of this, I think somewhere around here-ish, I've decided, the trend is clearly in place. Premium has gotten ripped out of a lot of calls and puts, and I decided that, we hadn't touched that gap close level yet, and it's generally a magnet after we crack the start of the gap. Price generally wants to fill these gaps. So around here, I'm thinking to myself, okay, premium has been cut enough. I feel like this is a nice time to place on some risk on some SPX calls, accept 0 on it because, I don't have a theory level that I can risk. So I'm going to grab farther out SPX calls. I grabbed the 39.10 SPX calls at 1.8-ish. And my plan was to get to that gap close and let that gap close push us through for a nice little breakout out of the zone, for a nice momentum breakout. Since we were right under it, it was a magnet. I'm not going to use it as a target since it's so close, and premium probably isn't going to move too much if we tap that, but I'm more so using it as an extra momentum booster to send us higher to the next psychological levels, which I identified on SPX. Let's look at SPX as 39.10, because 39 or 38.95-ish was around where my gap close was on ES, and so I wanted to push around above this 3900-ish as extra momentum, and I identified 39.10 as most likely where we were going to pin for the week. And so that's why I grabbed those SPX 39.10. That's why I grabbed that exact call. And that was my plan. I grabbed them at 1.8. And if you zoom out and look at this move, you can assume I got in around here. Not sure exactly where. I can check Tastyworks in a bit, but it was in this zone for sure, right here. And if you look at this move that I caught, you would assume that, I made a couple 100% on this trade. But yesterday was fairly frustrating for me, because it was one of those days where I felt like I did everything correctly. I identified trend. I had a clear target above. I had a clear level that could send us higher with momentum when we start cracking it. It was a clear magnet first, and then it would send us higher. And so I felt like I did everything correctly. Even the 39.10s didn't seem far away at the time. They had a lot of premium still packed in them. They seemed fairly healthy. And when you look at this move, we're trending upwards in this move. You would think I made a lot of money on this move. But the crazy thing is, I want to show you guys how those SPX calls moved, because I've never seen, I don't know. This seemed kind of out of the blue how much they got killed. So, oops. Okay, we're going to have to grab Fridays. So let's copy this one. I'll show you how we do this. So we're going to copy this, and then we're going to change the date when I paste it. Let's actually add one more chart here just to make things easier to see. Turn off customize grid. paste the strike, and then now let's change the date. So this says 06/27. Let's change 27 to 24. Enter, and here we are. Let's go to the 1 minute chart and just look at this first of all. So you would think this was a put chart from the way it looks, the way it's just downtrending while ES is uptrending. And I understand, 0 days are going to lose value, but when we're ripping 25 points within a couple hours, you wouldn't expect just straight downtrending, and that's not what I expected at all. So I did accept the full risk of the play. I put in around $900 into it, I believe. I accepted the full risk of it. If it wanted to go to 0, I was fine with it. We started pushing, and I was down a lot while we were pushing. After we've already ripped a lot, even up here, I was down probably 50%, which is insane. So you can see I grabbed them probably around here. Let's say at 12:18ish, and let's zoom in on ES. 12:18. So yeah, I grabbed them as we were trying to push back into this gap close, thinking to myself, okay, now seems like a fairly good time. Premium already got killed a lot. Now it seems like we're finally going to push back into it. I can accept full risk here and try to get a push above this with momentum. We died a little bit, slowly fell back, and then as you can see, premium just never came back up to my entry. I ended up adding some as we were starting to crack into the level above. So around, I think I started adding I added them on this push down back into my level, still expecting us to go higher with momentum above this. So I added, let's say around here, 14.3, or sorry, 14 hour 14 30 minutes. Yeah, that's what I thought. I added them around 0.4 0.3ish around here, and we still got the push higher that I was expecting. And in a minute or so I'll tell you another reason why I expected a push into close on Friday. And this is something that I've never really discussed with anyone, but that I've seen a lot, and I've seen a very common trend in the markets that generally happens. But just know I was expecting a push into close, and premium just wasn't helping me out. We were going lower in premium. It went all the way down to 0.2ish, 0.1 right before close. Right here was at 0.1, and I was in at 1.8 down here. Can you believe that? Luckily, last minute or so, last 2 minutes, we ripped higher, right to, let's pull up SPX, we ripped right to that 39.10. That's the strike that I had. That's why 2 minutes before we were 7 points lower. The calls were dead. We got that push higher. I'll explain why I was expecting a rip into close in a second, but we got that push higher. And if you've ever been in an SPX call like 1 minute before it expires, you know how wide the spread gets. People aren't trying to buy those or sell those at those moments, so the spread gets extremely wide even on a push like this. And so I kind of just threw out an order. I was fine cutting it around break even. I didn't want to cut this position for a loss. I'd rather it go to 0. So I threw out a sell order after I added a little bit at 0.4. I threw in the sell order at 1.2 or 1.3ish, just trying to get filled, and that would leave me around break even. Luckily, last minute, it got there. As you can see, look at this candle right here. Ripped all the way to 3.3. I don't know how real this is, but I locked up here around 1.2, 1.3ish, and took around $140 loss on this position, which I think, first of all, I feel like I should have made a lot of money, but I am grateful for getting out around break even. So you can feel my frustration. I really felt like I did everything correctly. We get a rip higher. I should get paid for it. massive rip into close, and I get out of break even. Not going to dwell too much on this loss here. $140 loss. That's around, less than 10% of the size I'm going to be taking on each trade. It's a very small setback. I'm excited to move forward with you guys starting next week with a full account size. It's going to be exciting. Let me quickly explain to you guys one thing I've noticed in SPX and ES that has allowed me to identify a possible direction into the close. And it's something I've used pretty commonly, and surprisingly it works really, really well. So let's say on Monday, the end of day, the last 30 minutes is fairly flat. Okay, that's something to note. It's a very flat, very choppy last 30 minutes. Then say next Tuesday, the last 30 minutes has a slight uptrend to it. Okay, that's something to note too. Then say next Wednesday, the last 30 minutes, SPX, has a nice little push higher. These are things that I take into account, and I notice that there are trends in the last, or whatever happens in the last 30 minutes. It'll generally carry on to the next day. What I think it has to do with is potentially, the market makers or algos who show up and do their work in power hour. We all know that the beginning of the day and the end of the day are where most of the volatility happens. So you could expect maybe there are some algorithms that just work during the beginning of the day, or some that only work near the end of the day, and some market makers that love trading the beginning of the day and they go away the rest of the day, and some market makers that show up for power hour and that's what they understand the most. And so what I notice is there's trends as to what happens day after day in the last 30 minutes. And so what I noticed, let's go to a bigger time frame. And so what I noticed is, last 30 minutes previously, we're slowly downtrending. This isn't a major move at all. Nice downtrend. This is more of selling than this one is. This is more choppiness than this last 30 minutes where we actually do push lower. So it looks like the trend in the last 30 minutes is slowing down in that direction, where on Thursday the trend has shifted and we get a nice push, although near the end of the day, last 30 minutes still fairly choppy, but we are changing directions in the trend in the last 30 minutes from downwards to upwards. And so that's what led me, another reason why I expected a push end of day. The trend had shifted in the last 30 minutes from going downwards to slowly start sloping upwards to eventually, now is the opportunity where if the trend is real for the last 30 minutes, we could get a nice push upwards. Not only that, but I saw, first of all, beginning of the day, we got a nice push. Very bullish, a lot of momentum. Not only that, while we were chopping, we were trending upwards. Not only that, trend end of day has been slowly sloping upwards, all leading me to take this SPX trade, which I personally would take, 10 out of 10 times. This setup has proven itself to me. And it's not only that, but as you guys know, if you look at my levels, is this the right? What was I saying? Not only that, but if you look at my levels also gave reason for us to go higher. In that chop, we had a nice target above, which could send us higher. So these are all the things I like taking into account on every single trade I take. Not only that, we had another magnet above this liquidity zone. We had the 21 above. We had, I believe this 21 has moved. Don't take that exactly, but I believe we had this liquidity zone with POC, with old POCs, with the 21 EMA. All things that could lead us higher. And so this is an example of how I could take multiple catalysts from my experience trading, place them into a single trade that, I still believe should have made a lot of money, but it was a little bit disgusting. Alright, enough ranting, enough talking about my day. Break even day, not much I want to talk about. Felt like I had a few learning lessons for you guys in today, but other than that, I believe that's it. And enjoy your weekend. I got a big weekend planned, and I'll see you guys on Monday. Have a great day.